Hi everyone, this is a short screencast for Independent Colleges Dublin for F6 taxation for December 2014. And in this series of 4 screencasts, we're going to look at possible themes for December, for the December exam. And really what's come up in the past, and perhaps sort of a worst case scenario question covering each of the 4 main tax heads. And we're going to start with question 1, the income tax question. And what I've got for you here is sort of areas that you'd be pretty familiar with and that you'd probably expect to come up anyway. What I'd like to do really within this short screencast is just touch on some of the things that students tend to have difficulties with and they tend to lose marks on, and that's really based on my experience of marking mock exams and indeed questions in class. So what you'll see in the first instance here is that just have 2 main areas, and these are 2 areas that obviously you will have seen having done lots and lots of practice and revision kit questions. Okay, so really the first sort of core area for us within income tax is employment income. Okay, and the way that you will have seen this area of Schedule E manifest itself is in a fairly straightforward income tax computation. Now, it's not too difficult to put an income tax computation together. I think what the examiner would do in this area is come up with some slightly sort of messy or complicated aspects of employment income. I'm going to detail those below when we go a little bit further detail into this core area. So essentially what we're talking about is a Schedule E comp. You're going to include in that comp various forms of Schedule E income, including salary, BIKs, possibly some share options, etc. Over and above that, and the comp I would expect to see for the individual or individuals concerned, a set of deductions that may well be pensions. It could be investments of some kind like film relief, etc. And then really the final point would obviously be the tax credits and things that students tend to forget sometimes, like the PAYE tax credit, or perhaps tricks around that area, perhaps a proprietary director who's not entitled with a shareholding of more than 15%. So I'll go in further detail through this area of Schedule E employment in a moment, but that would be the first sort of main theme, and there are lots of areas within that type of question for an examiner to really complicate matters and perhaps try to confuse you. So more of that in a moment. I mean, the second main theme, and these obviously could be linked together. You often find questions or Q1 questions that have an element of Case 1 and perhaps an element of Schedule E as well. But the typical way that we'd be looking at this is, again, relating it into some sort of IT computation. And really, there's only sort of 2 main ways that I would suspect the examiner will go with this. We're either going to be looking at a commencement situation or a cessation situation. It's highly unlikely to be an ongoing year, I would suspect, with just simply the 12 months ending in the tax year. It's really got to be one of these, okay? And again, more of the detail of that below when we have a look at the nuts and bolts of Schedule D, Case 1 and Case 2. The next area here that, you know, if I was setting the exam and I really wanted to complicate the Case 1 or Case 2 area, is I would certainly throw in losses. It's an area that students tend to dislike. I'm not sure why, perhaps because we aren't dealing with sort of straight percentages on straight profit figures. You know, it's not overly complicated. The key with using losses for an individual is to really make sure you get your formats right, and obviously use a loss memo preferably to help you lay out how you're using your loss. The next point in here, and there's lots of room for maneuver here for the examiner, is capital allowances, and in particular things like cars. And again, I'll detail clearly the areas that I think you should be concerned with there. Okay, so really for Q1, this would be for me the main core areas and the main areas that the examiner could attack you on. Okay, so if we move a little bit down the page, what you'll see here is that I've broken down the Schedule E employment area into further areas. And really the first one in this Schedule E area that I think is important for you to have a really, really good grip on is termination payments. Because Termination payments are sort of, or can be seen as complicated, but they also give the examiner, a lot of sort of areas to test in order to get a sort of a termination question or termination payment question, answered. There's a lot of work to do. So there's a variety of things that the examiner can test, and indeed there's a variety of areas that can be confusing. And I think that this area, if I was setting your exam, this would be the type of area that would really sort out the students who know what they're talking about, F6Ys, from ones who really don't. This is a very, very easy area to throw in, and it'll be clear from the answers whether or not the student is capable or not. So it's certainly an area that I would look at carefully before the exam. So, what sort of things do we need to do in this termination payment area? Well, I think in the first instance, those of you who've been in class with me will remember that we're talking about sets of threes, and really the first set of three is just this idea of exempt versus taxable income. In other words, a redundancy or a termination package has to be provided to you in the form of a list of items that the individual is receiving. Now, some of them are going to be exempt, some of them are going to be taxable, and indeed some of them will be, in effect, partially exempt. And really what we're looking to do is to split that list into those three main areas. Broadly speaking, it's exempt versus taxable. I mean, some items are indeed wholly taxable if they're per contract. For example, holiday pay. Some items are completely exempt regardless. For example, statutory redundancy. But it's that third group that's important, the ones that are what we would call partially exempt, or perhaps ex gratia payments, or payments that are not in line with the contract. Okay, perhaps unexpected payments, as it were, or unexpected by the individual concerned. And really what we're looking to do is to list those amounts. There's bound to be 2, 3, if not more of them. And our second set of three is just really our exemptions, our basic, increased basic, and our SASB. And that's what I've mentioned here. So really, if you think about it, a termination payment sort of element to a question is going to involve quite a lot of paper, in other words, quite a lot of workings. And it's important that you get your exemption formulas laid out correctly, because there's going to be a lot of marks for doing what is perhaps some sort of very basic work, certainly on the basic exemption and the increased basic. The SASB is a little bit more complicated, and there's quite a few areas where students fall down in that, not least in the fact that this area of completed years, in other words, the idea that you're including only completed years in the formula and not half years, watch out for that. Now, the other area that I think is confusing for students, certainly when we're looking at the SCSB, is this idea of average earnings for the previous 3 years. Now, the examiner can have a lot of fun with that, because it's highly unlikely, in fact I would say it's impossible, that the examiner would provide you with the average earnings to the date of termination. And bear in mind, that's what we need. We need the average earnings up to the point at which the person's employment was terminated. Now, that must mean some sort of prorating of a given year, because let's say that the individual had their employment terminated on the 30th of June. We've got 6 months in the 2013 year, and then 6 months obviously 3 years prior to that. Okay, so watch out for how that information is presented. What I would say on that is that certainly the SCSB formula is a surefire way of losing time. And this whole termination issue is a surefire way of losing time. So, if in doubt in relation to this SCSB area, come up with a figure for earnings and put it into the formula. You're better to complete the 3 exemptions rather than, complete 2 of them, or spend a lot of time completing 3 of them. So you're better to show method within your answer. Have 3 figures. You're obviously looking for the highest of the 3, and you're going to compare that amount to the amount up here that was what we call partially exempt, and then obviously the difference goes into the income tax computation. Last thing here under this termination payment area, not something that I've seen examined very often, but I wouldn't rule it out. Just this idea of top slicing relief. Do look for that within your text, and in essence what we're saying there is that after everything has been done, in other words, after we've calculated the exemptions, we've compared to the partially exempt amount, we still have an amount taxable in our income tax computation. What top slicing relief does is simply say that, well, if you're still incurring a tax charge, then compare that rate, highly likely to be 41%, given that the termination income is the top slice of earnings. Compare that rate to the average rate that you're given in the question. And simply add or indeed deduct a tax credit in your answer. Okay, so do look at that within your study text. The purposes of this screencast is not to go through the nuts and bolts of every single rule, but have a look at top slicing relief, and certainly as a minimum make sure that you can detail the exemption formulas times 3 very, very quickly, and you know how they operate and how they work. Okay. Next point in Schedule E is our old favorite, BIKs, or benefits in kind. And obviously there's quite a few different types of benefits in kind, but the one that I see regularly and the one that can be confusing is cars. There are quite a few small rules in relation to cars, and I would certainly have a look at the main tricks that you see within your practice and revision kit in relation to the calculation of car benefits. Okay, so just watch out for that, and also watch out for the examiner doing his old favorite of building in some sort of private use percentage for an employed person, and wondering whether or not you're going to apply that sort of percentage in some way. Bear in mind it's irrelevant, because the benefit in kind calculation is taking into account the private use element. So any private use element for an employee, let's say, is not relevant. That would only be relevant for case 1 or case 2 or a self-employed person. Next one I've chosen, probably not as common, obviously, as cars, is just preferential loans. Reasonably straightforward calculation, but something that students tend to get wrong quite regularly. We're just looking at the differential between the prescribed or the official rates and the rate that has been paid by the individual. So watch for that one. There's obviously 1 or 2 others, but certainly cars would be my main one. Cars would certainly be the main one. Next area for us under Schedule E is share options, and I've just put here something that I think would be the obvious way to go, although it does still tend to cause students difficulty. This idea of the income tax relevant at the exercise of a normal option, in other words, one that's exercisable within 7 years. And really all that we're doing there is saying that we need to calculate, or be given indeed, the market value at exercise, and we take off the exercise price, multiply that by the number of shares, and there we have the income that we need to include in our IT comp. Okay. Bear in mind, obviously, that the tax due is payable within 30 days, and that's obviously a refundable tax amount rather than a deemed tax credit. Okay. In terms of the deductions, just picked a few out, but certainly the pensions one is very, very common. It's very, very common, and this whole idea of age, NRE, net rather than earnings, etc. That little calculation can be difficult in the heat of the exam. Make sure that you have a grip on the basic NRE calculation, and obviously watch out for, and I would have thought this is highly likely, that the amount paid by the individual is not the amount that can be claimed. More often than not, you'll find that the amount is excessive. In other words, the amount paid in the year is higher than what the individual can pay based on age and NRE, which we'll pick up from the pick up the percentage from the tables. Okay, just a small point there. Watch out for the cap on NRE as well at 115 or 115k in our tax year. That's again something that I've seen played once or twice. EIS and film relief, again, not uncommon. These are the sorts of deductions you'd expect to see, and do look at those within your study text and see how they kick in. Very simply, we're looking at one or two restrictions in terms of absolute value. For example, EIS is 150k maximum in the year, and obviously we have a 30% IT relief in year one, and shares need to be held for 3 years to get the additional 11%. So watch out for that, okay? And have a look at film relief too, okay? In terms of the tax credits, again, you'll find anywhere between a half a mark and a mark for simply laying out non-refundable and refundable tax credits. It's such a shame to waste these marks, and yet in the, the mock exams that I mark, you see, not a lot, but certainly one or two credits being left out. The typical one is the PAYE credit, the $16.50 for someone who's employed. Okay, so watch out for the simple or the easy marks. You need to make sure in this Q1 that you get as many of the easy marks as possible. And I would have thought that the credit area is the easiest marks within the question for sure, because you can tell from simply a glance at the question that the person is married, that they're employed, etc., etc. So certainly those two are ones not to mix. Obviously, there may be one or two others, dependent relative, etc., etc. Sometimes they're a little bit difficult to figure out, but certainly let's make sure that we get the basic ones. Okay, right. Second area. This is my second core area, as it were, and this is Schedule D, Case 1 and Case 2, and I'm sure you would have been expecting that in a screencast of this kind, but let's just make sure that we know what the problem areas are. So really, in terms of the base of assessment, as I mentioned above, there's only really two areas that the examiner can come at it. It's either going to be a commencement or it's going to be cessation. And we really should know these rules, in particular with commencement year 2. Yeah, this second year rule, and remember that if it's not actual, i.e. that there's no accounting period of 12 months ending in the tax year, then we've got 4 possibilities, but they can broadly be summarized as really the latest 12-month accounting period ending in the second tax year. Okay, so make sure that you understand the format of how an answer works for base of assessment. Deal with 1 year at a time. Make it clear that you are dealing with that particular tax year and do your calculations. Obviously, with commencement, we're looking out for the second year excess trick. Yeah, this is it's got to be in there. It works in the taxpayer's favor. We're looking to make any deduction of that excess from year 3 to reduce the year 3 assessment. Obviously, conversely, with cessation, perhaps a little bit more straightforward. We only have really 2 years to deal with, as opposed to sort of 3 up above with a complicated second year. Cessation running from the 1st of January of the year through to the cessation date, and that penultimate year rule obviously working in the revenue's favor, being able to uplift the penultimate year to revise that estimate. And again, with these two areas here, they won't necessarily be signposted. So, do make it clear within your answer if you are changing a year. So, for example, if you are adjusting year 3 for the commencement, make it clear within your answer that it needs to be adjusted. In the same way, if you're adjusting the penultimate year, make it clear that you're adjusting the penultimate year. I've seen answers where it's done, but it's not clear what's being done. Okay. So base of assessment, a very, very important area, very commonly examined. Now, we've included losses because obviously that could link into either commencement or indeed cessation. Now, obviously, we have several possibilities for losses for individuals, and you'll recall that I mentioned when we kicked off on this screencast that students don't tend to like losses, and I think it's important to have a basic grip on how each loss works, what can be applied against what, and indeed perhaps the smaller areas, a little bit of admin perhaps, is a claim required, as in 381, certainly a claim is required there, no claim for section 382, it's an automatic relief. So be familiar with the basics. What's your format as well? Do remember that the case one assessment for an individual who has a loss for the year, so the trading assessment is nil. Keep the loss outside the computation or computations, and obviously apply the losses where they are relevant. The TLR or terminal loss relief, that's certainly a very possible one, losses for the last 12 months. So in terms of these areas, format is all important. Being able to lay the computations out first before you put losses near the computation. Okay, sort of linked into to that, don't forget to have a look at the implications for capital allowances and losses. Obviously, capital allowances can be used to augment or increase a loss. So watch out for how capital allowances work, and certainly if in doubt, if you have an adjusted trading loss, add the capital allowances in. More often than not, you should be okay with that. Okay, now in terms of capital allowances, well, for Schedule D purposes, there are a variety of tricks that the examiner can play, and in particular, I think that cars are again an area that are very, very important. Certainly additions, what value we're including in our little first box. Do remember that our starting point for capital allowances is aiming to get a figure for closing costs for items that are in use at the end of the year, and we're looking to apply 12.5% for that. The most common mistake that I've seen within that first area of capital allowances is for students to start getting confused about tax written down values, to perhaps be putting disposal proceeds into that box. Remember that it's irrelevant. What we're looking for is opening cost, additions at cost, disposals at cost, and then a closing cost, obviously at cost. So once we get that bottom line, we're going to apply our 12.5%. Okay, now there's a lot of he has a lot of ammunition in this area, particularly in the area of disposals and cars. You remember that we tend to restrict, or we do on occasion restrict ingoing in terms of a cost subject to the CAT and indeed the value. We also have to restrict outgoing if we've restricted ingoing. Okay, so do have a look at that area of where the disposal proceeds are obviously restricted or lowered or indeed increased. Okay, be careful with that area. I think the other area of capital allowances, and again one that students tend to have difficulties with sometimes, is this area of balancing allowances and balancing charges. Okay, so obviously we're applying our writing down allowance, our 12.5% to our closing costs, but over and above that, outside the computation, we're looking to compare our tax written down value with our disposal proceeds and see whether or not we have to deal with any capital allowance, or sorry, balancing allowance or balancing charge. Balancing allowance, obviously, we like. It's in another form of a capital allowance. Balancing charge, we don't, because in effect, we're increasing our tax adjusted figure and in effect increasing our earnings. Okay, so really that's just a short summary on the sort of areas that I think are important. I hope it's been helpful. Do focus in on them and look at questions pertaining to each of the areas that I've detailed, and good luck in your exam.